Hi, I'm Toby.
And I'm Nick.
And welcome to another episode of the Pure Property Podcast from Track Capital, where we talk about all things property and property investment. The aim of the podcast is to give you our industry insights and knowledge in bite-sized chunks to help you invest intelligently. So today we have got a first in a series that we are planning to do called Meet the Developer. So this is effectively where we're going to be talking to different developers that we work with, so you can get an understanding of what they do, how they operate, and you can get an introduction to them all. And today we are really pleased to have a person from Prosperity Wealth. We have Sam Richards, and Prosperity Wealth are a developer with an extensive track record, and they have their head office in Birmingham.
Yeah, exactly. So this is also one I'm really excited about. So today the idea is to get to know the developer a bit more. I mean, it's always well and good looking on the website as well, but we'll have a chat with Sam, learn a bit about his background, how Prosperity Wealth operate as a company, you know, what their vision is moving forward, how they see the sort of market at the moment, and then how maybe they're a bit different to other developers out there. So firstly, hello, Sam.
Hi, gents. Thanks so much for having me. Real pleasure to be here.
Excellent. No, we're really pleased to have you, and thanks for sort of joining us on this podcast. I think it's going to be very insightful for our listeners to get a different angle, because obviously we're always talking about sort of pure investment side, but you've obviously got the investment side, but also the development side, which is a good angle and a first person point of view to have for our listeners. So Sam, why don't you tell us a bit about your background and your role at Prosperity Wealth?
Yeah, so post-university, left with an economics degree, and the conventional route would be to go into some sort of finance role. But at the time, my family were looking at starting their own buy-to-let portfolio. And our journey and experience was really poor. And I was quite shocked by the amount of money that the face value of property, you know, it's potentially hundreds of thousands of pounds. And if you're putting that money into the equity market, you'd be advised by regulated bodies, there'd be a very professional service. And property at the time, it was largely serviced by estate agents, and they were just winging it. And so I thought there's an opportunity here, and I joined an investment consultancy business, not too dissimilar from Track Capital, and we had, like yourselves, developers up and down the country, and we were essentially selling investment properties to investor buyers. And I very quickly realized that there's a big spread of quality from developers. And, you know, like many things you learn the hard way, I realized that the key to this business is having a reputable development partner. And so after that, I left the consultancy side and worked directly for the developer, so that I could have some input into the schemes that we produced. I could guarantee the quality. And in the age of the internet, we can interact directly with our clients. So my role here at Prosperity, and the reason I joined them, is that Prosperity are the largest private developer in Birmingham. And I chose this city market because I think it's the hottest market in the UK because of the regeneration underway here. And Prosperity is a really good fit. And so my role is to engage directly with clients, but also to work with partners like yourselves. Track Capital. So obviously you guys provide investor leads and clients for our business, and I really back your consultative approach. So that's the partnership. That's my journey to prosperity, really.
Fantastic. And it's always, I think it's always comforting for investors to know that when they're dealing with a specific member of staff, whether it's on the broker and the consultancy side, or whether it's at the development firm itself, that they've actually been in property a while. You know, if they own property themselves or family members own it, having that direct experience is always useful. So yeah, that's a good oversight of yourself, Sam. And then how about if you give us a bit of an introduction to Prosperity Wealth as a company, maybe how they compare to other developers that are operating in the industry today?
Yeah, so property is an interesting one as a sector, and I'm sure you gents have experienced this. So you'll have small scale developers, and that could be anything from people who own individual plots of land and buildings. And there's a spectrum all the way up to, you know, the national publicly listed home builders. There's high street brand names of Taylor Wimpey Barrett. Well, Prosperity are a very, very large private developer. So it's a 15-year company. We're on the cusp of handing over 3,000 units now completed. There's a lettings business internally with 1,000 units under management. So it's a very, very well-established player in the industry, which it doesn't sound like it should be a valuable differentiator, but it really is. So I've joined this business, one, because of their Birmingham pipeline, but also because they're moving towards home building in the future. And on the trajectory that we're on, I can really see us getting to a stage where we list one day and become, a key regional, if not national, home builder. So what's exciting for me is, the stock we've got, but also the bigger picture of Prosperity's direction.
So, in terms of how things are going for yourselves this year in 2021, in terms of the market, and also if you have any exciting projects or focus that you'd like to give an overview of?
Yeah, absolutely. Well, I have to say, so this is being recorded at the end of Q1, day of the close, actually. And I don't know about you, but it's been a fantastically strong quarter, and there's now a real sense of momentum. So there was a lot of market activity around the stamp duty holiday savings, and the budget was going to be a moment of us all pausing and seeing what the Chancellor was going to do. And I have to say, he's more than kept the market appetite going. I'd say he's actually stimulated activity for the rest of the year ahead. So it's been a very, very active period. And then that is combined with the fact that for those who are in a privileged position, of having some surplus capital, we've got clients who've been at home for a year. They've had no holidays, no significant luxury purchases. And so given our model, and I'm sure something we'll touch on, where we have investor buyers who can build their deposit on a pay monthly basis, we've got a lot of appetite. And the final thing I'd say on that is we're in a climate now where interest rates are going to remain low for the foreseeable future. And so clients are now really looking at their situation and saying that this money's doing nothing in the bank. We've got to put it to work, and high yielding property, which is what Prosperity deliver, there's really a growing demand for it.
Absolutely. And I think that's something that's sort of mirrored on our side as well. It felt like we were saying every week, it's really busy, it's getting more busy, and it's just been sustained since sort of mid to late January. So yeah, a number of political influences, but generally that investor confidence has remained, and hopefully we'll see that continue throughout the rest of the year and into 2022. So looking at Prosperity's general, sort of more specific strategy, maybe in terms of projects and locations, could you give us an insight from a developer's viewpoint of what you might be looking for, either when you're going into a location or you're analysing a project specifically?
Yeah, absolutely. So it goes without saying, but Birmingham is our home market. The team largely from the city, but also strategically it's been chosen. So with the amount of regenerative investment underway in the city, I refer to it as a once in a generation regeneration. So, Birmingham springs to mind images of concrete architecture, sort of brutalism. They are wholesale knocking that down and getting it right this time. And so, you only have to walk around the city centre to see the cranes on the skyline. There's opportunity here. And then you've got HS2, the train line connecting us to London. And for me, there's no other UK city that's got the same level of investment underway. And historically, you can correlate that, all the big projects like Crossrail, they drive local prices. As a property investor, this is what you probably advise your clients. You can buy into a rising market, you can buy and add value. But in a place like Birmingham, where the market is rising so actively because of that investment regeneration, and the yields are as attractive. So that's what we're looking for here in the Birmingham, and we are city centre focused. So we've actually got a pipeline of 2,000 units, and we'll be releasing through yourselves at Track a new Birmingham city centre project, probably in the month of April, actually. We also have two other strands to our business. The second is the mid-tier or entry-level properties. And so those are typically Midlands focused. And the reason we're looking there is the yields are just so attractive. and we try to deliver those for less than £150,000 property. And if you combine that with our payment plan, it means that people can get into those schemes for £1,000 or £2,000 a month on an instalment basis. And then the final string to the bow is houses. Don't know about you guys, but we really foresee that quality family homes are going to be an increasing part of the buy-to-let portfolios of our investors. I think after COVID as well, there's an understanding that people want space and gardens and so we've got a 300-unit scheme in Norfolk. It's just half an hour north of Cambridge, actually, and we're delivering houses there, and we've got a small allocation for investors, and the pace of demand is extraordinary. So that'll definitely be something to look for in the future. So in summary, it's we've got prime city centre Birmingham because of the growth story, and then we'll have yield-focused properties. That's what's really driving us.
That's great. So it seems like obviously you do sort of cover all angles there, which is really good and very helpful for investors as well, because you're not limited to investors just looking purely yield or purely capital growth. You've got something which suits everybody's appetite, which is good. And obviously you spoke about Birmingham there. In terms of Birmingham as a location, obviously you mentioned the regeneration, the HS2. I mean, but is there anything sort of currently which you can see as a sort of a pulling point, and why you sort of see it as a great place to invest? Because Birmingham is a big focus for ourselves and also some of our investors, and we know it's a good city, but it'd be good for other listeners which maybe haven't come across Birmingham, for yourself to give an understanding and a bit more of a insight to Birmingham as a city and any projects that you currently have as well.
Yeah, absolutely. So I moved to Birmingham for work. I completely understand that for a lot of investors, they will have historically only looked to, London, the southeast, maybe a bit of Manchester, Liverpool. So they may well have never visited the city. So starting from the top, it's the UK's second city. That's its title, in that it's the second largest population, second largest economy. And for me, the background here is that Birmingham is in the middle of the country, and it's relatively close to London. And for many years, that was its curse, because the talent and the young post-university would go down to London for jobs. And I think we're at a tipping point now where London's become so expensive and the quality of life is just not there for young people, that they're actually going to live in key regional cities like Birmingham. And you've got a lot of companies relocating sort of key back office parts of their business here. And so, to give you a sense of the city, it's the youngest city in Europe in terms of population. Huge section of the population is under 25 years old, which obviously is a lot of rental demand. And really, I can't encourage you enough. Anyone who is remotely local should come and visit. We'd be more than happy to host you to a tour, because the city centre itself is very condensed, and they're doing a great job in connecting it all now. So it's a walking city centre. And really, for investors, you want to be looking at having properties within a 15, 20-minute walk of that city centre. We're not like London. We do have a good metro system, but it's not like the tube. Location really is everything on the Birmingham market. And so, it's a really big financial centre. It's a centre of startups. Some of the key names for your clients to do homework on areas like Brindley Place. So that was an old brownfield site on the canals, completely derelict, and now it's home to companies like RBS and Deutsche Bank. Deutsche actually have their only trading floor outside of London in Brindley Place. And a lot of my clients I speak to, they're just completely unaware that Birmingham has this sort of economy. But Birmingham is a hot and growing market.
Definitely, and it's something we've seen. The likes of Liverpool and Manchester's, the real regional city focus from investors. So not only are we having obviously conversations with our investors on a daily basis and recommending Birmingham, I think the actual demand is there. When you look at the search terms from investors or what gets the most clicks, that's something that we analyse consistently. And Birmingham's certainly up there in terms of the demand these days. So it's really useful to hear from someone who's on the ground in the city on a daily basis as well, to get that more detailed insight. But moving on then. So far, I think we've got the gist that, prosperity wealth. I'm not sure if many listeners picked up on it, but at the start, Sam mentioned about helping on the management side as well. as a broker, Track Capital, we're obviously working with different developers. So we get real exposure to see how developers assist buyers through the purchase process, whether it's complete or whether it's an off-plan purchase from start to finish. So one of the things, or a couple of the things that I personally like about Prosperity Wealth is that end-to-end solution. So whether it's lettings and management, mortgages, etc., they're effectively on hand to help from start to finish. Now, one of the things that we noticed as well and what we really like is the transparency of Prosperity Wealth. So I always encourage investors when they're analysing their portfolio at Prosperity, have a chat with the team, go into detail, look at the projects they've delivered before. There's plenty to choose from. And that track record and the size of their portfolio really gives investors confidence. So that end-to-end solution, that transparency and that track record is really important. But I think the biggest and one of the most unique factors for us is also the payment plan, which has been mentioned before as well. I don't know another, certainly on this scale, developer in the country that offers such a structure. Now, Sam, do you mind just giving us a quick run through about how the actual payment plan works and how that's ultimately beneficial for investors?
Yeah, absolutely. So yeah, the Prosperity payment plan, it's unique. So when investor clients go looking for off-plan investment opportunities, the fact is they're going to have to put down a deposit during the construction period. And with all developers, it serves two functions. One is you help the developer finance the construction of the build, but also some of it serves as a collateral for funding. Obviously, given our track record, we have very good relationships with funders. So your average developer would request maybe chunks of 10, 20%, and over the course of the build, you'll contribute maybe 30, 40% in total. Now with Prosperity, you'll put down 5% on reservation. So you do need a bit of working capital up front. And then we take the remaining 30% and we divide it into monthly payments. And so, as I say, from some of our entry-level schemes, for example, we had a project in Nottingham recently that Track Capital did very well on. Buyers there are going to be putting down £1,500 a month, which I appreciate. That's a good bit of surplus income, but a lot of working couples can achieve that sort of monthly outlay. And over the course of a 2-year build, they'll use that surplus income to build their deposit. And the reason we're able to do that is that Prosperity as a developer, we retain a lot of developer equity and capital in the business. So we're in a position where we can fund our projects ourselves to a large degree. And so we're not as dependent on big chunks of investor money up front. And so you can imagine from a security and a peace of mind point of view, this should give your investors a lot of comfort because they can see the build taking shape as they're making their payments. We've just found it works really well. And even for people who do have a good chunk on hand, that there's a peace of mind component. They'd rather the money was in their account and they could see the building take shape. And the reason you don't see it more widespread is that these smaller developers, they need money up front. And so it's an advantage of our size and our track record that we're able to offer it. Not to rant, but you mentioned our end-to-end management service. That's really born out of a function of necessity. I've heard the Prosperity journey. So you mentioned things like lettings and management. We've got a sister company, Lamont & Co. now, nearly 1,000 units under management. And the reason that business was born is that we were partnering with local estate agents after completion of the projects, and we couldn't get the quality of service that we wanted to give our clients. And so that's now a significant business in its own right. That's quite a major estate agency business, and they are fantastic. The rents they achieve, the occupancy rates, the quality of service is great. Similarly with mortgages. So it's all well and good going into high street lenders, but if you go in and say, I bought an off-plan property, you don't tick the standard boxes that high street lender and the broker are going to have in front of them. And so you might well get rejected, you'll have a bad experience. So again, we built an in-house mortgage advisory business so we could help you with that process. And it just makes all the difference in terms of making it a passive experience and removing stress from the buying process.
I think that's just to jump in quickly. I think that's a big one. What you just finished on there, stress. So obviously, ultimately, investors in most cases off plan are making a purchase decision based on, brochures, online profile, and then conversations with consultancies like Track Capital and maybe developers directly. But I know for us, it makes a huge difference when you can sit down with someone and say, firstly, Track Capital are going to be there from the start right up until the point you earn you're earning income into your account effectively. But also with Prosperity, we can say, look, we've got a major developer here who's ultimately going to guide you through that process as well. So it makes it a lot more streamlined. It gives the investors an opportunity to build up a relationship with Prosperity and take them from start to finish. When if you're sat in Hong Kong and you're investing a significant amount of capital, that's exactly what a lot of people want to see. So yeah, it's certainly comforting for us to be able to explain that to our investors as well.
Yeah, I'd have to second that. I think the feedback I've had when I've introduced investors to yourself and yourselves at Prosperity has always been very positive, and I think that's why we tend to sort of have a good synergy and work well hand in hand, because as you mentioned and touched on, and as we say here at Track Capital, we do really push that consultative approach. And again, that is just further bolstered by yourselves because you do operate in the same way. And I think we have similar values and the way we like to operate. And it definitely works well together. And we've always had positive feedback from anybody that we've put in touch. And it's nice to have that direct contact to say, look, yes, we can provide you all this information. Yes, we can help you with all of this. And these are our thoughts and these are our processes. But however, hear it from themselves. Here's the developer, and to have that direct contact, I think just gives so much sense of confidence to an investor and a buyer and just helps them feel more at ease. And again, helps reduce the stress as you touched on.
Yeah, I think I really want to highlight what a pleasure it is to work with Track Capital because of that. So we have agents all over the world, and Track, in terms of a consultative approach you have and take, the clients you send to us, they're just fantastic. They're so well informed and they understand the process, and they're comfortable and confident buyers. Actually, Toby, we could perhaps it would help your listeners to explain, a case study of the process. So, you had a client who was considering a Nottingham acquisition. In that case, you actually arranged an introduction with myself so that the client could have a conversation with the developer. I think mostly to check that it was a good fit, perhaps do some direct due diligence. And in that case, it was a success. They went on to purchase and they're very, very happy as a buyer. But again, I think just the fact you're taking that time really shows the level of service you're providing to your clients. And yeah, it's admirable in this industry. It really is.
Yeah, I think exactly that case study is a perfect one because it was a Nottingham development and it wasn't one that they were necessarily considering, but I'd been speaking to them for quite some time, and then obviously we had an opportunity come available with yourselves, and because I'd sort of got an idea and understanding of what they were looking for, I just thought this suits exactly what they want. It ticks the majority of their boxes, and because of that relationship we had, I was able to introduce it to them straight away. But because they were kind of, I suppose, a sort of a novice investor, it wasn't one that we could sort of push, and it's not one that would happen quickly as per se, because they need that extra time to do extra due diligence and talk through. But having that ability to say, look, here's Sam from Prosperity, I've answered sort of your questions. I know you have some more questions about the process and how it's going to move forward and the development itself. Here's the developer, speak to them. And once that introduction was made as well, again, because of it being sort of a semi-novice investor, that definitely helped make them feel so much more at ease, clarified all the questions they had. And again, it moved forward in a good and timely manner as well, and it took a lot of the stress out. And again, having both parties being able to offer that approach is for me, I think, is a massive factor, because it's a very stressful process, especially if you're new to it all. I mean, any property purchase is never stress free, but the more people you have on your side taking that stress away from you or helping you through it, it makes the transaction a lot more easier and manageable. And I think that's where we definitely get on well. But moving on from there, I think a question I would have to yourself, Sam, obviously working in the industry, are there any changes to the property industry and the market that you think should happen? And also, are there any maybe that Prosperity are trying to undertake or lead the way in?
Yeah, actually, just to loop back slightly, the two questions fit together. So we're discussing the case study example where a Track Capital client had got in touch with Prosperity as well, introduced themselves. A change I'd see, and it's something Track Capital are great at, because of a consultative approach you'd taken and you understood his needs and his objectives, he was able to transact quite quickly when the right opportunity came up. And so from a client perspective, a change I'd like to see is that they aren't shy about having those consultative conversations. Do get in touch with brokers like yourselves, discuss the goals and objectives, because as I say, this opportunity, it was a really prime two-bed. And it's come to pass that the novice investor you were dealing with has happened to secure the best two-bed property in that newly launched development. They did have to move quickly to secure it. There are understanding some nerves, but that's the difference between having a sort of a transaction-based relationship and having a consultative relationship. So from the client side, I'd say, you might have inquired about a specific project, but just have a think about your goals and objectives. And I'm sure, Nick, yourself, Toby, you'll talk them through. And when the right opportunity pops up, they can execute quickly. In terms of the industry, the market, where Prosperity leading. So I think we're at the cutting edge of off-plan houses as an investment product. We've seen that in demand for freehold assets and demand for family homes. The Downham market, Broad Oak site we've got, the success of it's really a testament to that change. And then in general, I think that the yield focus in key regional cities is going to keep on going. So with changes to taxation policies on buy-to-let mortgages, people need that yield cushion now. So you need that 5% net yield that you can get in cities like Birmingham and Manchester and Liverpool. And so I think you're going to see a continued appetite for those regional cities. And that's playing out in the price rises there that we're seeing.
And I think, again, on the initial point there, like you mentioned, how we have the consultative approach. I always say to investors and clients that I speak with, introduce us to other products and investments that you're looking at, because we are here to be consultants and help advise you, even if it's not a investment that we have access to. If it is a good investment, I am happy to sit there and say to you, go ahead with that. That's a great investment, because at the end of the day, they're there to make money, and it's a long-term relationship we're building. And you touched on that point. I can't stress enough to open up to ourselves as consultants and let us know what your strategy is, what you're looking to achieve, and other properties and investments you're looking at, because where we can help, we will. Even if it's not directly for ourselves, we will advise as best as possible.
Yeah, certainly. And I think when you look out there as well, what a lot of our investors will do is they'll make inquiries and obviously speak to a few different companies. So being able to say, look, we have this developer here. They work in different regional markets. They've got an extensive track record. They've got freehold. They've got leasehold. They've got various payment plans in place. I think as a general package as well, it's really handy for us to introduce clients to Prosperity Wealth. Okay, cool. And then we touched on this earlier, Sam, about how busy quarter one was of 2021, various influences from government policy, etc. Is there much you see happening this year in terms of your price perhaps rises, and then going into 2022? How do you see things playing out over the next 12 to 18 months?
Yeah, it's going to be busy. So with the government policy on stamp duty, we're going to see really high transaction volumes across the housing sector. We're looking at price growth this year of 4% on average. I think those are the Savills stats. Their research is always pretty strong, but it's going to be separated. So historically, London will have led the way. I think you're going to see London plateauing. And those key regional cities are going to be driving growth. So again, Birmingham, you're looking at 4-5% growth year on year. And that's underpinned by investor demand, first-time home buyer demand. And then at the end of this year, sort of autumn period, we should really be seeing the full impact of the economic recovery as the Britain gets back to work, as it were, post-COVID. I don't know the exact number, but the stats on savings on account, it's in the tens of billions saved due to lack of consumption through the lockdown, and you're going to see that flood into the market. So yeah, we're really excited for the year ahead. It's going to be a bullish time. As such, we're launching projects. We've got a lot of exciting options. And then I also touched on the fact that interest rates are going to stay low now for the foreseeable. And so, yeah, there's going to be good demand for investment products.
Yeah, that's great. And so me and Nick earlier on in the year, well, at the end of last year, we did give a prediction. So you mentioned the 4% from Savills. Now you have had a bit of a head start, but what would you say at the end of the year? You'll obviously ignore Savills because it's a bit of a bias if you're going to take note of what they've predicted. But what is your sort of gut feeling, and what is your prediction on what prices may end up at? And don't worry, we won't hold this to you too much. So yeah, we're just interested to see what your thoughts are. Get your prediction, and we can always revisit it next year and see who was right.
Okay, I think it's going to be more than 4% on average across the UK. So that's not just mindless optimism. I think we're going to see an awful lot of activity this year. I myself am in the market, both residential and investment. I think you're looking close to 5% growth. But again, the economist in me comes out. The national average statistic is quite a clumsy one because the face values in London are so high that they skew the market. So, I'll talk about our home market. Birmingham, you're looking at 5% a year, easily, absolutely easily. And I'll hang my hat on that. We'll touch base next year, gents, and see how that plays out. This is the advantage, though, of property. The fact that you can buy an income-producing asset and get the capital appreciation. I mean, it's unique, isn't it? So,
yeah, I think that's definitely sort of one of the sort of points that I do touch on with investors at the moment, because sometimes they can look at sort of the costings of some of these new builds and think, the yields maybe aren't as good as a freehold terrace I can get in a random place, which is really cheap and no overheads. But then when you start to factor in these city price growths and how aggressive they are, and you factor that in over the sort of coming 5 years or so, that's where you do very, very well from these property investments. Yes, your yield may be marginally smaller than a freehold terrace outside of the city centre, but that real aggressive, explosive capital growth is going to be a lot more effective in these city centre areas, as you touched on, because of the benefits such as Birmingham, as you mentioned, where there's a lot going on, a lot of regeneration, and it's absolutely on fire at the moment.
I think that's the factor, right? So we've got to look at this on I would say even more than a regional basis, on a hyper local basis. So these pockets of the country where prosperity are ultimately focusing on, such as your Birminghams, your Nottinghams, these they're investing their own capital ultimately into this, as are other developers. So they must believe in these regions. So yeah, I definitely think ultimately the growth rate, that high 4-5% on average, is going to be underpinned by these high performing cities. So it's going to be exciting. And then we always encourage investors. You might see on the media headlines, property prices doing this. It doesn't always work analysing it on just a national level. You have to be a bit more hyper focused if you can. But certainly, I agree. Ultimately, it's going to be an exceptionally busy year due to a number of factors. But also, one of the things that I see reported on occasionally is the confidence in people that may have not wanted to put their property on the market yet. So I think we're going to see a lot of vendors and a lot of sellers come back to the market as things open up and things improve. Obviously, that's going to have a knock-on effect with competition and demand for these properties. So hopefully, as a back end of this year into 2022, it's going to be really, really strong.
Just one last point there. Sorry. So any property development that we introduce via Track Capital, you need to convey the fact that our exposure to that location is years and years and years. English planning is a slow process, so we will have held that site for, maybe 2 years before it comes to market. And then we've got a 2-year build period. And so realistically, it's no coincidence that we are based in Birmingham and targeting that market. It's one of the strongest performing in the country. We offered Nottingham recently. That was number 3 in terms of year-on-year price growth. We very, very carefully target our acquisitions because we're exposed to between millions and millions of pounds. And so we've got to have a good growth story. And so that'll be driven by strong local fundamentals, big investment underway, growth in jobs. But yeah, we've really done the homework because as much as your buyers are putting their money on the table, we as the developer, we're really putting our money on the table. And that might well be the difference where, you can have a direct relationship with the developer through yourselves at Track. Because we can explain why we've really committed to a city or a location.
I think that's a very good point there. And again, another thing that we do mention to our investors is you technically do the research, due diligence, and homework for the investors. So that again helps give them confidence in where they're investing. Unless you are investing on your doorstep and you know the area inside out, you know which street is good, and you know realistically where good capital growth is going to happen in your local area. When you're looking further afield and investing remotely, follow the developer, the good developers as well. Always do sort of your research and look into what they're looking at and the due diligence they've done, because you've done all the hard work for them as a developer. So again, it's just yourself as an investor going over it, ticking your boxes and making sure it all stacks up. So I think that was a great point there, Sam. So listeners to our podcast, if they want to find out more about Prosperity and the projects you offer, how do you think is best for them to get in touch?
Yep, so we've just launched a new website. So if you search for us, Prosperity Wealth Birmingham. But in terms of getting in touch, genuinely, Track Capital, yourself, Toby, Nick, you are amongst the finest investment consultant and brokerage team we deal with. So if clients want to hear more about our developments, I would recommend they get in touch through Track. We three work together very closely. And so, I'd be happy for any clients who want to learn more. I'd send them your way, genuinely.
That's great. Thanks, Sam, obviously, for joining this week. Much appreciated. And it's been a great insight to Prosperity Wealth as a developer and how you operate and what you do yourself there as well. So thank you very much for that. Nick, why don't you introduce what we are going to be talking about next time?
Sure. So on to Liverpool next week. So looking at the exciting things that are happening in the city in terms of the regeneration, the employment, development projects, and really being a bit more hyper-local on our location focus, like we did before in Manchester, like some of our listeners will remember. So yes, that's it for today. But thanks again, Sam. Really useful insight into Prosperity Wealth. And that's all we have time for.
Brilliant. And this, like we mentioned at the beginning, this will be one of many Meet the Developer episodes we're going to be trying to do. So keep a lookout. Thanks for joining us, and we'll see you next time. Bye-bye.
Thank you. Bye-bye.